Uh, Folks, just thank you so much for your time today, and Dave and the crew over at GW. This is a great opportunity, and it's a lot of fun. Particularly in the world that we live in now, to be able to do some knowledge share. So, just a little bit about me before we get started. Um, I've worked in startups my whole career. Started in renewable energy, being able to travel in sub-Saharan Africa, developing utility scale solar projects, so big solar farms that power the grid and so forth. And it's been a fun ride ever since. I've worked in cybersecurity as well as private equity and finance as well. And so, for you guys who are just getting into startups, maybe for the first time, it's a pretty interesting environment that we're living in now. And being a part of a startup is kind of living your career on hard mode. So welcome to the game. And there's some things today that I want to share that have been really useful principles that have driven my work, primarily focused in sales and marketing and business development. And there's some principles I wish I learned earlier on that just been absolutely important in my last couple of years in my career. The first principle is that in business particular, revenue is truth. And if what you're doing, does not have value, someone won't pay for it, right? It's pretty clear and cut. But if it does have value, people will pay for it. If it has a lot of value, people will pay a lot for it. And one of the things that interested me in business was that type of clear-cut factor, right? And in order to really make progress and make things advance. So, one of the guiding themes that I'll have today is the role of revenue in measuring how your company's doing and how it's working in the marketplace. It isn't the number of employees that you have. It isn't the dollars that you've raised. It isn't the number of patents you filed. Those are secondary in support of that mission of revenue. And so our job today is to try to understand how that happens, right? How does and why does someone give money to a company in a business, and how can we maximize that? And I'm a philosophy major from way back in the day, so our goal at the end of the day is to try to find the truth in our business ideas and to get a bit of clarity on guiding us in the early parts of doing these startups. So the first step is getting some definitions down. What is a market? A market is a place where a buyer and a seller exchange goods and services. It's a place where a business transaction happens. What is marketing? You can break it down into two different ways. It's the study of buying or selling in a market, but it's also the act of buying or selling in a market. It's not only advertising. It's not only social media, cold calling, done plenty of that, or Instagram DMing, folks trying to sell you stuff in any which way that they can. It's a frame to study and then act in a marketplace. So our first step, and we're going to walk through an example here with you guys, is a far too common one is a guy buying avocados from Whole Foods online. We're just going to focus on this transaction, try to unpack it, understand what's going on, and then how we could jump into this marketplace and make something happen. So we focus on we want to find all the way and go to the bottom in a marketplace to the individual transaction level, because that's where individuals are making real choices. They're weighing different alternatives against each other. We really want to understand, the mind of the buyer, right? Because they buy something for some reason. We want to understand what's happening at that level, and then work at a higher level to understand if there's a compelling trend that is, hopefully points in a meaningful way to a profitable business. So we're going to unpack and use a couple different concepts to help us guide our way there. Really powerful way that I go about this is, sorry, one second. All right, cool. Um, a really powerful concept that I've used and kind of that theme of searching for truth is to develop what is called a value thesis, right? Just like the scientific method, we can have an idea of why something is happening in the marketplace, right? Um, it's our answer to the question of what is happening in a particular business transaction. And we can and should test that value thesis. And if our research bears a better thesis, we should go with that and move forward with it. And the value thesis consists of four different parts. There's the market, which is the buyer, right, and the entire ecosystem that the buyer's in. There's the value, which is the reason why a buyer buys, right? It's what they're hoping to gain at the end of the day. Sometimes it's something very concrete, but sometimes it's something totally abstract. We'll get into some examples of that. And then the method, how is that value delivered to the buyer? Um, and we'll try to separate the difference between value and method. A lot of times there's overlap there. And then different alternatives, right? We want to understand why, a customer chooses our product versus other products, or why they choose the competition and not us. We want to understand what's happening at the individual buyer level and the larger market level to gain some understanding of what's important in the marketplace and how we could better align our business to meet that need. So a shameless self-plug here, Revolve Growth Services. I'm the founder of Revolve Ventures. I do consulting for startups and small businesses. And we help startups build revenue through hands-on strategy development and execution. So the first bit, startups here is my market. Those are the customers that I go after. The value that I deliver is building revenue, okay? And strategy development and execution is how I deliver that. That's my method for doing that. And hands-on touches a bit on method, but is also speaks a little bit to the alternatives, right? It's my competitive point. I want to emphasize that I'm working in the trenches with these teams and that I'm not just throwing a consulting deck over the fence at my customer and wishing them a good day. So that's a way that we could, start to pull together our value thesis. And a statement like that is also our value proposition. Or our elevator pitch. It's that first concise sentence that we need to start to talk about why our business exists, right? And what our value thesis is on how we are going to grow our business and ultimately what you'll have to sell investors on and sell customers on to. It's really going to be the center point for all of our sales and marketing activities and really going to be the center point in our business to help guide product development and hiring and everything else. It always comes back to the value thesis. So to get back at the example from the last slide, a guy buys an avocado from Whole Foods online. Which is just, something we've observed in the marketplace. It's interesting to us. Maybe it's a boyfriend, that we're seeing, who's doing that. We want to understand what's going on in the marketplace. It's interesting to us for some reason. But what's missing from the statement? What are the holes that we need to fill in here, right? We have a guy, which is, helps point to the market that we're interested in, but it's too small, it's singular. And we have a method, which is Whole Foods online. But where's the value? Why is that guy buying that avocado from Whole Foods online? There's a lot of potential reasons that come to mind, but we don't know at this point. And we don't know the other alternatives. We don't know how that buyer's weighing those choices against other things that he may be wanting to spend money on. So the first step is to focus on the market. And for the market, we want to understand the buyer and the broader ecosystem that he falls in. We want to learn as much as we can about him and others similar to him. And three concepts that will really help us here is the first is total addressable market, and then market segmentation and buyer profiles. These are ubiquitous terms that you'll see throughout startups and businesses, and you're going to have to speak well to each of these as you move forward, particularly to an investor audience. So the first concept is total addressable market. And we're going to focus in on the target market first, which is our market of interest, right? And our example here is, the amount spent by guys who buy avocados online. That's what we want to know. That's the total dollar amount of spending, right? It's the price of those avocados times the amount of avocados sold. Available market is a little bit larger than that. It's our guess and estimate on what we think that market can grow to in a reasonable way. It's an assumption. And the total addressable market is the entire ecosystem of buying and selling loosely related to the transaction. Our target market is unlikely to fill that entire space, but it could dip into that total addressable market in some useful ways. So to bring it back to our example, in the middle is our target market. It's an overlay of the other related types of transactions. Starting in the back is all the grocery related spending by everyone. And I didn't map the size of these boxes to fit actual spending. These are just examples. I'm sure there's a lot of men who buy avocados online at Whole Foods. I don't think it's 15 to 20% of all grocery spending though. So but you'll see part of that grocery spending box, there's two smaller boxes, avocado spending and whole food spending, right? Those fall into the greater space of grocery spending, but they also overlap, right? There's folks, you'll see a tiny sliver of folks outside of the available market that are buying avocados from Whole Foods. But we also see online spending, and that overlays as well, right? All the different online spending that happens, there's going to be a section of that that's spent by men who buy avocados online at Whole Foods. And then we have men spending as well. We want to understand this entire ecosystem to really get a sense of, is the total addressable market interesting to us? Is it big enough for our potential business, right? Is it trending in the right direction? Is this a space that's shrinking? How fast and how slow does that market shrink over time, right? Is this a really volatile space, or is it pretty stable? We want to kind of understand how all these forces move together, because this is the place where our customer, our potential buyer, is making a decision, right? Maybe they want avocados, they're trying to figure out the best way to get them. Maybe they want the value that avocados give them, and they're looking in the marketplace for different ways to get that. So moving on from there, next term that we're going to use is market segmentation. A market segmentation approach tries to break up our target market, that market that we're interested in the most useful ways. And you'll see like the generic different indicators that we could use, things like age, gender, race, nationality. Those are all pretty relatively easy things to measure, right? But we'll also get into interests, maybe hashtags, if we're starting to do a lot of social media based analysis to understand our potential market. Do they have beards, right? Particularly this target market, is that interesting to us? And most of those different indicators on the page really apply well to the business to consumer model, and I won't get too deep into that, but if our target market are individuals in the marketplace, individual consumers, these types of market segment frameworks are going to be really useful to us. Towards the bottom, you'll see the B2B stuff. Our different business verticals, may buy a different business product for different reasons, right? Businesses in Asia might buy certain products in a certain way. Businesses in the United States and Europe might buy products in a certain way. The size of those businesses may be different in the marketplace. There might be different things that are important to them, right? A Fortune 500 versus a very small business, right? And if those are our potential customers, we want to understand that different ecosystem. But what we're looking for at this stage with market segmentation is to look for really interesting and compelling trends. We have this rough histogram on the right, and we want to find, where is there, a significant level of spending in this place, right? Who of the guys who are buying avocados at Whole Foods, what's kind of their age range? What's their, obviously the gender's already talked about, their nationality. We're looking for interesting ways where we could help focus our attention and really, understand what's happening in this target market, right? What's the most useful way to break up that target market to help unlock some of the wisdom that exists there. So applying that to our example, right? We've taken our target market here, and we want to break it up. We ask some questions, right? What are the typical age ranges of someone who buys avocados at Whole Foods online? And we see that 80% of them are age 18 to 30, right? Millennial-ish class. That's pretty compelling. That's interesting to us. Oh, sorry, one second. We want to understand deeper of what's happening there. 70% are college graduates, also interesting. 30% are white. That's kind of like, that it's probably somewhere in line with normal population statistics. It doesn't really stand out. And, maybe we had a particular hunch about, people with beards, wanting to buy avocados. And maybe, people with beards who motorcycle, right? We're just like, we have a hunch, we want to go test it. And we see that that it's not really that, significant, right? Maybe this is a huge proportion of people with beards, right? And if we really care about this market, right, maybe that's our thing, we're really passionate about it. We still want to understand what proportion of the greater marketplace that takes, so we could plan our business accordingly, right? But for now, it's like, okay, those hunches didn't really bear, what's interesting to us. Let's instead focus on the bigger marketplace here, right? So we're going to keep these statistics in mind. Now, there's a lot of different ways that you could uncover this data, right? And I'm sure as you were looking at these slides, you're trying to figure out, like, well, how do I answer these questions? I have an investor deck that I'm trying to pull together. I'm doing some of this research now. There doesn't really seem to be like a clear source of truth, right? And that's kind of what happens in business, right? There are strong sources of truth, right? You'll get a lot of government reports and databases about spending and customer index and spending. You'll get business to business consumer reports that talk about particular budgets for certain types of spending. Those things are interesting. But one of the most powerful ways to do it, particularly at your level, when you're just getting started, is to do interviews with your potential market, right? If you and folks that you may feel are in the broader ecosystem, and talk with them. Try to understand what's important to them. And I won't get into it now, but there's better and worse ways to conduct those interviews, right? We don't want to lead the witness. We don't want them to go towards particular outcomes that we feel strongly about. We just want to understand our potential buyers as much as possible. And a couple creative ways of doing that that you'll see throughout the startup space is kind of pseudo marketing campaigns, right? Tim Ferriss is a big fan of this, where you'll create like a website for a product that you actually haven't made yet, and you'll do a social media campaign and you try to see how many people click on it, right? Maybe you change the value thesis proposition a little bit. You're able to collect some data on certain things that are more interesting to potential markets than not. Start to collect data on who's clicking those things, right? You could really get deep down the rabbit hole, but it's really valuable information that you get there. Another way to do it is you could actually, Google provides data on the the types of Google searches that people do, right? So if you're seeing that all of a sudden there was a big spike in monthly in avocado spending by men this last month, right? Because men are Googling for it, and it just is a tremendous spike. That's interesting. What was happening before? Why did that jump happen, right? You could really get into the weeds and start to understand these bigger trends that are happening, and either to guide your business towards it, or if it's a negative trend, maybe don't jump in to the marketplace there. One of the biggest pro tips that I can impart is that potential competitors usually give you a lot of really useful information. And you could kind of look at their marketing material and be able to understand who they're focusing on and what are they trying to sell. What is the value proposition that they're giving them? Because maybe they've done a lot of this hard work for you already, right? And it's good to know where the competition's at on a lot of these different topics. And just remember to be honest with your assumptions, right? This is a scientific process on one level. This is a value thesis. It's not a value truth, right? As new data comes out and new information comes out, and as the world changes, update those assumptions, change those assumptions, but start with something and make it count. And test those assumptions with meaning, right? That's kind of the art of startups and business generally. Moving on to value, right? This is the difference made in the buyer's world. And we want to try to identify the specific reasons why someone's buying something in the marketplace, right? What's important to them? What's compelling to them? And there's kind of two different ways to measure that. There's the easier way to measure. We could talk about cost, right? Someone buys something because it's cheaper than the thing that they were buying before. Related to that is kind of quality quantity, right? For that same dollar amount, you could get something better or you get more of something. Another thing to think about is the efficiency, ease of use, access, right? You think about a pizza delivery service, a pizzeria, for example. They used to have phone-only delivery. You would have to call someone and speak to a human, and they got a mobile app, which made things easier, right? That could be, have value to your potential customers, right? We also want to think about things like risk, right? Someone might buy something else because it has less risk. It's a less risky investment. Or they care about their health, right? You could have like a pharmaceutical drug, for example, that has strong data that benefits a person's health, right? And then there's a whole world of other reasons. Now, the harder to measure ones, but is a heavy motivator in the marketplace, are things like status, community and identity, things like well-being and expertise, right? We buy something from someone because we trust them more, we trust their opinion more. Again, it's kind of hard to measure. There are ways to measure a lot of these things, but we want to understand this bigger theme of value here, right? And as we're talking with our potential marketplace and these individual consumers, we want to understand, what are those reasons, right? What are the first couple things that they say? And if you talk to enough of them, what are those common threads throughout? Right? Maybe those are things to focus on, and we can start to understand what is important to our customers. And for here in our example, where's the value for the buyer, right? We're trying to understand that. Is it to save money? Is it the health benefits, right? Start to think about that and start to uncover that, and think of ways that you could test that and incorporate that into the market research that you're doing. Now, method is different from value. This is how that value is delivered to the customers. And we think about distribution, which is like physically, how does that value get to the customer?
Hey, Brandon.
Yeah.
It's Dave. I just want to jump in real quick. We're about 5 minutes from the end. So
sure.
If you have, whatever you want to get done next 5 minutes, let's get her done. All right?
Yep. Yeah, we'll get there.
Good.
Thanks, Dave.
Cool.
Appreciate
We'll land this thing at 12:35. Cool.
Sounds good, Dave.
All right.
Thank you. So for distribution, this is how the value gets to the customer, and that can happen through a product or service, right? The product is used by a customer to get that value, like a car or a house or something like that. And a service, can be like software as a service, like a SaaS tool, or it could be an actual person doing something on behalf, like a delivery service. Pricing model also fits into this, right? This is how the buyer pays for that transaction, right? This is the dollar amount that you give. It's the dollar amount itself, but it's also, the price and the terms, right? How, like, over what duration does someone pay for that service, for example? Is it monthly subscription, annual subscription? Things like freemium, you'll start to hear things like that as you're getting familiar with the startup space. And I kind of want to point out MRR and ARR. That's monthly recurring revenue and annual recurring revenue. Those are going to be important to your investor audience. That's, how much money is each customer giving you, on what terms? Is it monthly subscription like Netflix? Is it an annual recurring subscription like Amazon Prime? Those types of things are going to be really important to your investors, and they're going to want to see statistics around that. Talked about value versus method. I'll kind of skip over that. And alternatives, right? This is the fourth piece of the value thesis. What are the other ways that a buyer can get the value that is being offered, right? That could be a direct competitor, or it could be something more abstract, right? A competitor from something that seems totally unrelated. And we start to unpack that. Now that we understand the value that our marketplace wants and is trying to get, we could start to see the other sources of value, right? Because there's a fixed number of dollars that our marketplace is going to spend trying to solve this problem, to try to get the value. Who else is competing for those dollars? And what we could see is that if we flip the total addressable market on its head, we unlock the competition. These are all the other folks that are competing for those dollars, right? Direct competitors kind of fill that available marketplace, right? They have a lot of the same overlaps that we're going after, right? That's interesting to us. We want to understand what's happening. What are they focusing on? But we also see something like health subscriptions, right? But that wasn't a part of our original market research, right? But they're delivering a similar value, right? If our market cares about the health benefits of avocados, other services and products that deliver health outcomes is going to be important. And when you're comparing the competition and kind of where you stand, it's important to think about how the buyer's priorities, right, that you've unlocked in your market research, and think about the seller's strengths and weaknesses, right? How much your product or service overlaps with the buyer's priorities is going to be your strength, right? Now, it's never going to be a complete overlap, and there's going to be different competitors that overlap in different areas, but understand what your strengths are and double down on those and focus on those. So to bring it all home, quickly, we can start to pull together this thesis on the study that we're doing. Most men who buy avocados from Whole Foods online are young and educated. And there's evidence that they do this for the health benefits and ease of delivery, not cost, right? That's something that we gathered through our interviews. And so as what you do in the second stage of marketing, right? You've done your market research, is try to pull together something to act in the marketplace, to launch your product or service. And, one example that I came up with is Guavo, GW Avo, boosts well-being for men through its farm to buyer avocado subscription service. You have the four pieces here. Boost well-being is going to be that value. Market is men. And farm to buyer is a bit about talking to the alternatives a little bit, right? You're doing this in a certain way. You're connecting farmers to men through the subscription, and the subscription is that method. Now, I'm going to touch on this slide before Dave jumps in, but as you're getting into marketing and kind of using this value thesis to guide your way through, actually engaging with customers, to actually pitching customers and getting customers to buy your product. I think these are usually the most important things that I go back to. Brand and messaging. You want everything that visually your social media presence, the individual messaging, how you're wording certain things, to be as in line with your value thesis as possible. You want it to be as consistent to that message as possible, because you want to make sure that your target market, the folks that you're trying to reach, are being heard, and that they want to feel that you understand their problems and that you have a meaningful way to solve that. And you want to price that in a way that works for that market. And you want to be reaching out to those folks in a way that makes sense, right? If I'm doing a LinkedIn-based campaign for this avocado subscription service, maybe that makes sense. Maybe a lot of my target market is susceptible to that type of campaign. Maybe Instagram or Facebook or something else might be a better fit. And think about how much you need a budget to test this value thesis out for the first run. And set up some measures and some KPIs, those key performance indicators, and and try to measure the results at the end of the day, and see where you stand and where things can be improved upon. At the end of the day, I'm kind of beating a dead horse here, right, with this value thesis. But again, so important. Wish I knew this earlier on in my career. Is for the market, how many dollars are there to take? For the value, why do buyers pay for what you do, right? That's why you exist. It all comes down to that. And as you're doing your sales and marketing, always lead with value. That's why the customers pay for it. A lot of times they don't care what's in the black box. They don't care how the service works. They don't care how the app works. They just want the outcome, right? So lead with that, and folks who care more about the method are going to do that due diligence themselves, provide that documentation to them, make it accessible, but always lead with value, right? And for competition, are your strengths strong enough to have a place in the market, right? There's going to be folks who are trying to take those dollars from you. You're trying to take dollars from them, but really focus on delivering that value to your customers at the end of the day. Focus on understanding your market and your buyer, because the product, the team, the other factors are secondary, and those are the things that are easier to fix, right? If you found that your product is totally out of line with what may be a strong opportunity in the marketplace, you could fix the product problem. You can't fix the market problem. So with that, I have one more slide, Dave. This is more just more less business.
You got one more slide, Brandon. Let's do it.
That's it, Dave. There's a difference between what's important to you as an individual and your team and what you care about versus what may work in the marketplace. I've definitely learned this a lot. And, there might be certain strengths that you have that benefit a really strong value thesis, and there's a really strong overlap, right? But if you're starting to do things that are kind of not in your sweet spot, that you're not excited about, a lot of times you have to do those things, and that's fine. But if you're really focused on the market that you're not passionate about, you don't care about, it's going to be hard. And, there might be other things that are important to you that motivate you to do that. But just keep that in mind. And there's times where, that you might have a business you're more passionate about. Maybe you just want to sell avocados to guys with beards who ride motorcycles, right? You might not have as big of a business opportunity, right? It might be a small marketplace. But if that is what makes you happy, like, roll with it, go with it, right? Just because it might not be optimal, investors' eyes or others' eyes, just do what is best for you. And that's the freedom that we have with being business owners at the end of the day. So cool. Done, Dave.